everyone. Here's your risk disclaimer. As always, read that over. I'm going to get right into this. So, I personally think that this is going to be for the individuals that don't like long-term swing trading. And I'm going to show you exactly why I don't like it. Because there's just, well, number one, let's just put it this way, gap risk. Gap risk is just, it's very, very overwhelming. So, if you look at the chart on a day-by-day basis like me, you can see that there's a lot of reasons to why you wouldn't trust that the market would just take off. So, I got my butt handed to me a couple of times this week, and it's very, very, very difficult for somebody that just comes in here and expects it to pan out for them. So, the reason why I got my butt handed to me is because, for one, it's really, really hard to trade with the right broker. I was trading with Tastyworks, and I just don't feel as if they care enough about their customers. They're more interested in giving you bad fills, because as soon as I entered the marketplace, I accidentally pushed the button earlier today. I made a mistake, and the market turned on me, and I was like, oh crap, great. So I literally took a small little $20 loss, but overnight I took a $300 loss on ES. And I was assuming that I would be correct. So I was actually, that's funny, it's so embarrassing to admit this, but I just want to be honest with you guys. I was long in here. I had mitigated my risk, so yesterday I had a position on, and I was long down in here. So I did, where is it? And this was an options trade, so it's not like an execution. So I can show you that. I just gotta look at my history. So I can ever figure out where it's at. So history. Yeah, you guys won't be able to see this. So we got I mean, this is a little bit embarrassing, but you know what? We all get our butts handed to us. So as you can see here, I bought, where is it? And you can see the prices and everything. I have my account number blurred out, so I'm not worried about you get my money. So, where was it? Let's just put it this way, I was taking gambles. Oh my god, this is terrible. But this is to show that I like to be transparent. So, I think that this was probably my loss right here. So, ES, so I had bought a call that was out of the money on ES. It ran in my favor, it completely went my direction, but it just didn't pan out for me. I was correct about the direction, and this is exactly why I don't like trading options on Tastyworks, because they'll fill you at a loss right away. They will do everything in their power to fill you at a horrible fill where it's just you're automatically at a loss, plus the commission on top of it. So I lost, and this is where I just said, you know what, I'm done for the week, I've had enough. So I believe, so I bought this for 34 and 37. These were both little losses, and then fees and all that, and then I lost 200. So I can't really explain this, but I know that I lost about $200 to $300 this week alone just by trading NASDAQ and ES. What's funny, well, it's not funny, but what's interesting is the fact that this influences me to not feel comfortable holding positions overnight. Do I feel comfortable holding positions overnight that are long-term? Yeah, because it's more of like, you don't have much Like the drawdown isn't super intense. I mean, you still are gonna have drawdown. Like you can't escape that. But when the market turns on you, you can lose 5% of your options value. And then in a couple of weeks, if you time it good and you develop that skill set, then your drawdown just goes away just like that. But there is a lot more drawdown. So like I have long-term ES calls and micro ES calls on here, but they're in drawdown right now. They've lost half their value, but I'm not worried about it. I know they're going to become in the money because I'm confident in my skill set and I know it's going to pan out. But these overnight, like same day expiration trades, yeah, they can burn you pretty quick. And I did not, I did not enjoy that. That was like, oh my god, oops. I do not think that doing overnight same day expiration trades is something that I'm going to do because it's just it helps you sleep better at night. Let's just put it that way. Like you sleep 10 times better at night knowing that you have no risk on. So, I showed you all that. Now, lunch yesterday, and this is what I mean. So, yesterday I was long in here. I did actually chase it a little bit, I will admit, but at the same time I was comfortable with this added risk because I was aiming above these highs and then into this fair value gap in this order block. And what's funny, it's not funny, it's more of interesting to see that this did in fact pan out. So it ran up to here, like that was my objective. Like I was expecting it to take out this short-term high, and I was watching to see if it maybe wanted to run up and take out this high, but I wasn't expecting that. I just chose this gap right here, and that's where I was content with. We got that. I was long in this particular area, and what's ironic about it is because it was just so late in the day that nobody had interest in that option, so it was expired and worthless. It did not become in the money. It was a 4.30 or 4.435 call, I believe it was. I have to go back and look, but I was aiming for this imbalance up here. So I think this is a 30-minute imbalance. Yeah, right here, 1 hour imbalance. So I was aiming. This is not correctly drawn here. I was aiming for previous day's high, basically. So Wednesday, previous day's session high. Like that's what I was aiming for. Yes, right here on Wednesday at 6 a.m. we did have a higher high here, but this was my interest because we have a fair value gap right here. It did not offer that. It did, however, offer a wick exit. So basically this above this high, you were able to exit that position. And also, you noticed that we came up into a fair value gap too. So that's another reason to why you could have collapsed at that. And it was just that time of day where the market was pretty much like closed. And the algorithm has done its job for the day. So I can't really expect more. And then obviously while I was working later on in the day, this all happened, and that's how I took that fat loss right here. So I did have a trade in here where I lost $40 on it, and this move right here gained it back, and I made 80. So if I would have collapsed it, I would have been fine. I wouldn't have been sitting here in this situation. So I have decided that I no longer will. In some cases, maybe I will if I trust it, but for the most part, I no longer feel comfortable holding positions overnight ES. I will do long-term swing trading like with the Procter & Gamble and Amazon and DoorDash and all that I showed you. I trust that those are going to go higher, but this is too, like, I'm just more skilled at day trading than I am at like swing trading. I just don't like swing trading ES unless it's really low leverage and long-term out of the money calls. So my bullish stance on ES for now, I'm going to go back to the daily chart. So what I'm going to do is I'm going to start using AMP, and I'm going to start trading with AMP again, because I don't trust Tastyworks, because all these trades that I saw, like, everything that I've taken so far has panned out, and the overnight avoidance has definitely helped me, like, would have avoided losing trades. I'm not trying to avoid them, I'm just saying that that's a good way to take losing trades, is to trade overnight and expect to, not get stopped out. Because I literally just every single day, previous day's low, taken, previous day's low, taken, and we have failed to take out previous day's high. So like Monday opened up, failed. Tuesday opened up, didn't take previous day's high out. Wednesday opened up, maybe took previous day's high out. I'd actually have to look at the chart, so I'm not going to get into that. But right here, we're failing to take Wednesday's high. And then we break below previous day's low. Today, broke below it again. And I wonder why that's happening. Look what it's reaching for. Right here. Stops. Oops. It has grabbed them. It's not by much, but I expect it to reach down in there one more time and come down into this gap. And then I expect higher prices. So it's the same thing with NASDAQ. See how they're just nice, smooth, super smooth edges. And it'll just run right through that, and then it'll run up and take all this out. That's what I'm expecting. I was expecting this week to actually be violent to the downside and then go higher, but obviously I was wrong, and we didn't get that. So I'm not going to sit here and complain about it. That was just my thoughts. So again, this is why I don't like it, because you wake up, and I'm sorry, but when you wake up and you see this, and you're long, and your stop's right here, that might be a little frustrating, because you think it's going to run above these highs. But in reality, if you break it down, you got to realize that we're below the new week opening gap. So on NASDAQ, this is really something that's been helpful when I first started learning new week opening gaps. So if we go below it and we trend below it, we're probably going to stay bearish all week. That's just what I've learned. I'm not suggesting that that's reality, but usually that just means we're in a bearish market. So I should have that marked right here. So I'm going to go and find that. I don't have it for NASDAQ. I only have it for S&P. So we'll take this right here. I'm actually going to, so this candle's open right here. And this candle's open right here. It's an order block right here. As you can see, it touches it. Back in there. Snags that. Takes out buy side right here. Perfect delivery price. I love seeing that. Now we'll bring this over. And notice how we just break away from it. We're failing and failing, and we reach up one more time into it. Right here. Tuesday actually managed to take Monday's high out, which that doesn't surprise me one bit. So now that we're breaking below it pretty bad, right here, so let's just draw that out in time. So, boom, just right below it, it just collapses. And then we also have, maybe we have a lot more than this, but the market structure shift right here. This is very, very ugly, violent price action, but I like it. That's what we need. So, market structure shift, trades up into a premium. Where's the buy stops? in this price leg lower, right here above this high. So you can reasonably expect it to take out this high, trade up into this gap, utilize this order block right here, to that lower time frame. That's a little bit cleaner. Right here. These up close candles right here. Comes up to it right here and automatically just breaks it. Well, not automatically right here, but we are breaking lower off of that. And we also have to look at time of day too. So this specifically is 1 o'clock. You actually see a little bull flag right here. So specifically at 1:30, market breaks down right here. One of these relatively equal lows. And then you also have a down close candle right here. So this is something that if you were expecting lower prices, you obviously didn't get that. And then 1:30 rolls around and offers that opportunity. But it's just so smooth that like these highs right here, it comes back up, takes that buy side again right here, and then consolidates into Tuesday. Trades lower, just makes really nice smooth edges. And if you look at ES, just double check here. Same time frame. So NASDAQ. I actually could see why this is occurring. Right here. This price action right here. Changes to a 1 minute chart too. We'll zoom all the way over here. Thursday. You can actually see the failures right here. So look at your cursor on the left and right here. You got ES going lower here, but NASDAQ is going higher. And ultimately into the calls we're just kind of sloppy. So there's nothing in here that would interest you already. And then you're just kind of waiting. So all this sell side is just asking to get taken. So Wednesday comes on. Where is that time of day? Right here. So Wednesday at, I mean, prior to the open, I mean, it's already breaking down already and taking previous day's low. But you can see how time of day actually manages to take out previous day's low right here. And the reason why you're expecting that to happen is because of those relatively equal lows down here. That's marked by this line. So you go back to the 4-hour chart. You can see that right there. These bills. Now these weren't here. Like these lows weren't here. It actually had to break down and then show its willingness to go lower. But as the days go on, like Wednesday here, you can see it's actually breaking down and targeting those lows. So we give that clue, shift to market structure right here. Again, this might be confusing for a lot of you, but shift to market structure right here, below the short-term low. Leaves a nice big fair value gap right here. And then we trade up into a really, really deep premium. And if you look at electronic trading hours versus regular trading hours, you can see why we reached up in there to fill in more of that gap. And then ultimately, I think we're going to, excuse me, I think we're going to reach down in here next week. This looks nice and juicy. Same thing with ES. Nice, relatively equal lows here. See those right there? Nice and smooth. And I think with Monday, we're going to probably reach down in there, and then we might be a trending week. So we might trade below that, hit the new week opening gap, high, leave it, and then trade high. Right now, I am sticking with my classic Tuesday to Wednesday low of the week. I'm just going to pull the news drivers over. Go to Forex Factory. We'll see what's going on next week. So this week we have news all across the board. Not anything high impact. I mean, there's high impact news, but nothing like FOMC and CPI. So today, PMI numbers. Obviously, what drove price. A little distraction there. Monday, we don't really have anything. So Monday's probably going to be really quiet. You'll get some action, but I think it's just going to be a dud. CPI, that doesn't matter, that's CAD. So we got these. Consumer confidence right there at 10 a.m. That's where you're expecting the lows to form. And then Powell might make us a low of the week on Wednesday too. So keep that in mind moving forward. And we'll talk with you next week. If you find this helpful, just hit the like button. That way I know I'm helping you out.